Wednesday, February 5th, 2020, Maneco 64, home of alternative economics and contrarian views. I'm laughing because I did my first video about 46 minutes ago. The Dow was down about 30, gold was up about 8. And then while I've been editing my video, everything changes. So I had to do another video. This is the first time ever. The Dow futures jumped to up 200. Gold dropped to from 1562 to 1553, and I was trying to find out what happened. So I went into Twitter and I got a tweet from Northman Trader, a guy who I follow, and First Squawk at First Squawk has reported on Twitter. Chinese TV research team at Zhejiang University has found an effective drug to treat people with the new coronavirus. So that's why the market goosed up. It looks like that's the reason why. So very crazy, the markets. So I had to basically stop editing the old video because it really didn't make any sense, especially where we are right now. So let's go through the markets. So gold about 45 minutes ago was around 1560, 1562. It had rallied up 8 points. Now it's at 1554.80. Low's been 1552. Yesterday, of course, gold got hit hard. I'm not worried. And why is that? Well, because the ounce of gold is still an ounce of gold. What changed yesterday was the value of the paper currencies, of the fiat currencies. We know that they're not going to stop printing these confettis, pieces of confetti, which are paper currencies. They can do it willy-nilly as much as they want. Gold and silver, of course, are not easy to come by. You need to work hard for them. You need to, you can't conjure them up out of thin air. So right now, silver as well was up 11. We're now down 2. We're at 1756. Yeah, and the Dow futures is now up 230. So up 0.8%. Really crazy markets. I don't know what else to say, but they're not real. We saw the Tesla stock price yesterday as well in the last few days. That's another bubble there. I don't know what people don't see. There's a lot of distractions as well, of course. This coronavirus, the State of the Union address, and other stuff. But I noticed that yesterday, the term repo for the Fed, they offered 30 billion, and financial institutions actually demanded almost double. The bid to cover ratio was almost 2 to 1. They demanded 59 billion. So things are not well in the system. Don't buy into everyone saying that this is a great economy, not only in the US, but in other countries. I looked also at the Baltic Exchange Dry Index. That is at like generational lows, and it's dropping even further. That's a bad sign for world trade as well. So let's continue. S&P, of course, is up 20. So everything's gone green in terms of the stock market. So really crazy. This is the first time ever, as I said, that I've had to basically delete a video and start another one because the markets move so quickly. And of course, right now it's just before 9 o'clock London. It's 8:50. Currencies haven't really moved that much. I won't go through the foreign currencies right now. Oil, of course, was below 50 prior to this tweet from China about finding a cure for this coronavirus. Now it's up like 2% at 50.70. Brent is up 2.3 at 55.20. So there you go. Crazy, just amazing how the markets are moving. Central banks, of course, cannot stop printing money. I think those two factors there that I talked about earlier. First, the repo market, the fact that the Fed actually lowered the amount they were offering for these term repos from 35 in January to 30 billion in February because they want to wean out the financial sector from this. And lo and behold, they come and bid for almost double that 30 billion. I don't think the Fed's going to be able to wean out the financial sector from their subsidy. They're bailing them out. The other thing I would point out is that 14 out of the 24 primary dealers, so these are the financial institutions that deal for the New York Fed or with the New York Fed in this repo market, they're foreign institutions. So why is the Federal Reserve bailing out foreign institutions? Well, because the too big to fail banks, of which American banks are part of as well, is an international club, and the Fed bails all of them out. And who subsidizes them? In the end of the day, the American taxpayer. And why is that? Well, because the Fed creates more and more currency to bail them out. What that does is that dilutes the value of the dollars in your pocket. And that's just to save not only American banks, but people like Deutsche Bank, UBS, HSBC, Mizuho in Japan, Canadian banks, French banks, Societe Generale. It's really crazy. And it's funny that we don't hear anything about that from President Trump. He's very tough on foreign countries like China negotiating, like Venezuela, but he's not tough on the Fed in terms of the fact that they're bailing out foreign institutions. Maybe it's because he's got he depends on Deutsche Bank for the loans for his business. Who knows? Anyway, just wanted to put that out there. The other point I would make is the Baltic Exchange Dry Index. This measures the price or the rate for chartering ships, dry bulk ships that move goods around the world. And as you can see by this chart here, this Baltic Exchange Dry Index is at generational lows. And it's at the lowest level it's been in a year. And we're being told that everything is fine. What I think it's going to end up in is hyperinflation. Hyperinflation, of course, doesn't happen in a strong economy. It's not overheating and rising prices. Hyperinflation is when the powers that be, central banks, politicians, they create more and more credit or print money to try to get the economy out of a hole. All that does is it increases the debt, and eventually people lose confidence in the currency because the currency is the flip side of the debt. So this is what I think we're getting here. We're getting the beginning of hyperinflation, beginning of the process where monetary policy, fiscal policy is going to lead eventually to the loss of confidence in the currency. And it's not going to be because of a strong economy. Don't buy into this mantra that we're in the greatest economy ever. We only had about 2% GDP in the last GDP data. That's not big, especially when the United States is running a 5% of GDP budget deficit. So what else can I say? Crazy morning so far. There we go. Chinese TV. Research team at Zhejiang University has found effective drug to treat people with new coronavirus. And apparently that's why it looks like the market is just turned around 250 points. If you enjoyed this report or video, make sure you hit the like button. Subscribe to the channel if you haven't yet. Please share this video far and wide. And you can also follow me on Twitter, BitChute, Facebook, Steemit, and DTube. I wish you all a great day. Take care. Bye.